Hey folks, welcome to Pro Trader Strategies, Spotting the Trade. I'm Eric Wilkinson, and we are an educational company. So if you guys want to learn a little bit about the markets, how the markets are impacted by the economic data, but ultimately what we are trying to do here is talk about option strategies that we can implement around any given assumption. So if any of those things sound great to you, smash that like button. It's kind of like feeding a bot. When you smash that like button, it tells that bot, hey, there's something important here. I'm going to go tell somebody else that looks just like this about this video. So please help us out and feed those bots. Also, if you guys have any questions, comments, or want me to talk about any specific underlying ETF, future stock, throw it out there in the comments section. I'm going to be keeping my eye out over there. Make sure you guys are participating in this because you guys are going to drive the content here. All right. So make sure you got those comments going. And if you guys hit that subscribe button right next to it, there's a bell that'll give you a notification when I come in unannounced. Sometimes in the afternoon when I find an option strategy or any type of trade that I can implement into a portfolio, I'm going to let you guys know about that. So I'll pop on. You guys will get that notification there. All right, so let's get on with it. With the markets, I'm going to share my screen real quick because we got the bonds moving a little bit higher here today. And really what's happening here is an overarching theme that Fed governors here in the United States across the pond are probably going to be stymied and stuck in a corner on raising interest rates. Now, the ECB came out with their press conference, left interest rates unchanged at 0. Our bonds are moving a little bit higher here. And all of this has to do with this whole thought process of we're seeing inflation rise and we aren't seeing the job creation going on. Another thing we saw here is unemployment claims coming in at 310,000. That was better than the expected 343,000. But something to note here, people are claiming for unemployment and they are still not getting hired on these jobs. We saw the job openings is around 10 million. We also know that there's only about 7 or 8 million folks that are still unemployed from post-pandemic. All right. So they got laid off during the pandemic. There's about 7 million of those folks that still haven't found a job, but 10 million job openings. All of these job things are really a bit of a conundrum here, especially for the Fed, because we are seeing these job openings. We're seeing claims come off, but people are not being hired. All right. People are still being unemployed. That is giving the bonds a move to the upside because interest rates, like I've been saying forever, are probably not going to rise anytime in 2021. I don't even see the taper happening in 2021. I think that will probably start happening in 2022, maybe this spring. And then maybe an interest rate hike later on in 2022. But at this point, I see growth in the economy slowing. We're seeing some inflation there. You can't raise just based on inflation. We need to have that hiring happening as well. We need to have that employment moving along. So we're seeing a little bit of a push here. Crude oil. Crude oil is in positive territory, folks. We were expecting inventories for crude oil, which usually come out on Wednesday. We had a holiday, so they bump it to Thursday. But crude oil inventories was supposed to be a drawdown of 6 million barrels. It was only a drawdown of 1.5. All right. So much less of a drawdown, meaning supply is increasing there. All right. That should weigh on crude oil. We also have seen the economic numbers coming out of the beige book that I wanted you to talk about, or I talked about yesterday, wanted you guys to keep your eyes out for later on in the afternoon, because it is an important gauge for what the FOMC is going to look at before determining rates. And what I mean by that is the beige book comes out a couple of weeks ahead of the blue book. In the blue book, we don't get to get a glimpse at, but they get the beige book, which is the same thing as the blue book, but the blue book is basically updated 2 weeks after. All right. So really not a whole lot's going to change in the next 2 weeks. So we can take a pretty good look at the beige book and see what some of these glimpses were. And what they're seeing is inflationary pressures across the board, especially in brewing. The cans, aluminum cans, is a major pricing aspect of these brewers, because the aluminum is becoming so expensive, that canning operation is digging into those margins really big. As a matter of fact, Sam's came out, Boston Beer Company, and was talking about their earnings. They're down quite big today. Most of it's due to the fact that you folks aren't drinking as much White Claw as you used to. But some of that also has to do with the amount of cost that's going into this canning operation is eating into their margins. That's hurting as well. So we were seeing some weakness there in Boston Beer Company, Sam Adams, or SAM is their ticker symbol, based on some of those headwinds that they're seeing. And we've got gold coming off again. I mean, well, it's in positive territory, but really feeling weighty. And I would expect we would see a lot more drivers to the upside here with inflation. We're just not getting that follow through. Bitcoin is getting a bit of a move to the upside. Again, I'm kind of on the Ether bandwagon right now. VIX coming off as the market is kind of feeling a little heavy here. Now, we've gotten several topping patterns. As a matter of fact, yesterday in the NASDAQ with the weakness, we could almost see that that would be a confirmation of a top. Let me zoom in on this just a little bit. I don't want my Fibonacci. I don't want the Fibonacci. I want to draw. But this topping pattern, confirmation, settled below that wick. That would be a confirmation of a top here, but we're not getting a whole lot of follow through today. I would say that the risk, generally speaking, based on this setup, is to the downside across the board in equities. But my feeling now is, I've been talking about risk being to the downside here, folks. My feeling is that because I think that the overarching thesis is that the Fed is going to start holding off on the taper. Remember, the taper is basically they'll stop the buying of bonds. That if they buy bonds, they hold interest rates down. They're going to start tapering, which means slow down that asset purchase, which would allow the bonds to start coming off. If the bonds come off, then interest rates go up. They're inversely correlated. So I've been saying that if they're going to start raising rates, that it's going to actually be a very big headwind going forward because we haven't met that unemployment mandate. Well, now I'm starting to think that because a lot of these economic data points, especially what we saw with the beige book, which is just a recapture of everything we've talked about, we're seeing a slowdown in the economy, higher inflationary pressures across the board. So I was saying the risk is to the downside on a correction. That was based on what I thought the Fed would do. Now I'm starting to believe the Fed is getting the picture that, hey, folks, we aren't going to be needing to raise rates, or we really can't raise rates. We can only talk about it at this point in time. So really all they're going to have is the talk about the taper, and they aren't going to taper. And that means that risk is to the upside in equities. I think that we were waiting for a taper tantrum, and now I don't think that we're going to get that tantrum, and we could see that pop to the upside because we've been winding up here. You've heard me talk about this. If you stay consolidated for a long period of time, it's like a rubber band on the balsa wood airplanes, right? You twist that propeller, the more and more you twist it, the tighter and tighter it gets, and when you let go, the faster it snaps back, right? The idea is the same. The longer, if you only twist it a couple of times, it's not going to spin very fast. But if you crank that thing more and more at this tight little level, like we're seeing here in the NASDAQ, it has a tendency to make a big snap in one direction or the other. I've been talking about the risk being the snap to the downside. I'm leaning towards the risk now being a snap towards the upside. I'm going to start looking to pare back some of my negative deltas in my portfolio because I think once you start seeing these Fed governors come out and say, hey, we're starting to see the economy slow down a little bit and we might not be tapering, we're going to get that pop to the upside in equities. So a little bit contrarian in the sense that we got bad economic data and that could be good for the equities. Well, that's the reason why is based on what I think that the FOMC will do. And we've got the Dow Jones Industrial Average slightly in positive territory, but we could say across the board, we are unchanged for the most part. Again, yesterday, a bottoming pattern and no follow through today, almost another bottoming pattern here. Not quite close enough to the trend channel here that I've drawn up to maybe take a trade on that, but if you look at the SPY, it is actually very close to that trend channel that I've set up here. Overnight, pretty sloppy across the pond. You know, they're not raising interest rates. They're talking about slowing economy. That was a little bit weak. Strength coming into the day, really based on earnings for the most part across the board, because we had, well, let's not talk about good earnings. Let's talk about the bad ones. GameStop. To the downside here, something to talk about here. GameStop had their earnings. Obviously, they still are losing money. But one of the things is it was an 8-minute earnings call. Ryan Cohen did not even show up to talk. They didn't give any forward guidance. They didn't talk about what they were going to do with this huge amount of cash. They weren't talking about pivoting or any of those things. And as a matter of fact, Reddit traders, I think, have had enough of GameStop. They, for one, don't have the volatility there. Two, I think they're losing faith. You know, we've been talking about the fact that this is the most shorted stock, one of the most shorted anyway. Well, the reason why is because earnings calls like they just gave were garbage. All right, no forward guidance, not talking about pivoting in this crummy business structure that they have. All of those things to me, I mean, I've shorted this a couple of times, made a little bit of money on it. I mean, don't get me wrong, I'm nervous as heck about selling this. But at this point in time, I think the Reddit traders have even pulled their ripcord on their bullish sentiment in GameStop. So if you are long GameStop and have made money, or even if you're down money at this point in time, I would seriously look to cut your ripcord on this one, pull the ripcord and get out. But, you know, in my humble opinion, I just don't think that you're going to see the buying pressure of those, the Reddit Wall Street bet folks. They're just, I think they're heading to the, they're heading to Clove, CLOV, because it's going to have more volatility. They're jumping on Clove and a couple of other ones. BBIG is another one that they're looking at. So they're kind of on to the next phase, which means I would roll out of some of those other ones. If you haven't had that move, I don't know if they're coming back anytime soon. I don't think it's worth sticking around in GameStop to wait for folks to come back in here and believe in the stock, because right now, after that earnings call, 8 minutes long, not talking about forward guidance, how they're going to pivot, how they're going to actually make this company profitable. To me, that and the Wall Street bets folks are tired of this as well. I mean, Wall Street's been tired of them for a long time. Now they're starting to catch on. LULU comes out with better than expected earnings, up over 10% as of right now, on the lows though, but nice huge pop here based on across the board. Everything looks rosy. I mean, menswear is even increasing sales. So Lululemon, maybe wait for a pullback here on this, but I would say that the athletic wear, the stay-at-home trade, the folks that can make an outfit for work and play is somebody that's going to do very well. And Lulu has proven that as we're moving forward here in this one. And I thought there was another one I wanted to talk about on my trades, but I think it was just Lululemon and GameStop as of right now. The other thing I'm going to be looking at is Intel. A little bit too low of implied volatility for what I'm looking at, but XLU is a candidate for a possible straddle. And we're going to talk about how we would set up a straddle around an underlying, why I would use a straddle for XLU in a situation like that, or what is the best time, not necessarily for XLU, but for someone to implement a straddle into a portfolio. High risk strategy, high reward. It's the highest reward option strategy you can get, basically, other than going out and buying a call and all of a sudden it goes to $1 million. But for the most part, the amount of money you can receive on an option strategy, especially for collecting a credit, this is the one that gives you the biggest credit. All right. So unlimited risk strategy. I will show you how to implement a strategy like a straddle in an IRA or with defined risk that really acts like a straddle. All right. So you can see all those levers and pulleys in the video. Make sure you guys, if you have any comments about this or anything else that I've talked about, comment in the comment section over there. I will circle back around to make sure you folks are clear of concept. Also, smash that like button. Feed those bots to find somebody just like you to watch this video. So throw them a cookie by smashing that like button. And finally, subscribe at the bottom. That way you'll know when I'm coming on, for one, and two, you'll get a notification if I pop in unannounced. That's if that little bell is clicked there. So make sure you guys take advantage of that. This afternoon, I'm going to be doing a video. Thursdays after the close is when I usually do my videos where I'm going to drill down on a specific strategy. This particular strategy is going to be the straddle. I'm going to be looking at XLU for that straddle and why I would put that around this one. Maybe not why I wouldn't do it in Intel, even though I think Intel might stay in a relatively tight trading range. Intel, not a good candidate for this strategy, whereas XLU will be. And I'll show you how, when, where, and why. All right, so check that out. Hit that subscribe button. Feed those bots with that like button and comment. I'll circle back around for you folks to make sure everybody's clear of concept. That's about it. Other than one last thing we got to talk about is if you can't take that, take it easy. Bye for now.